Perseverance is not a long race. It's many short races, one after the other. Walter Elliot. My friends, each and every day we persevere in and out, no matter what the market's doing, no matter what's going on in our lives, 10 to 15 minutes. Why? Because you will not learn the nuances of the market if you're not in it each and every day. And you learn by doing. Practice trading, following these charts, figuring out how to do it. So let's jump into these charts. Hope everybody's looking forward in the States to a great Memorial Day weekend. Remember, markets are closed on Monday. They will open on Tuesday, the 27th of May. We see stocks and Bitcoin are down. Bonds and gold are up. Bonds just a little bit. Let's jump first into the S&P 500. Now, this is where we were yesterday. We were at a 70% bullishness, 75% backtest accuracy. Our evaluation is still showing that. However, as I was telling you yesterday, I've got some real warning lights going off. We look at what the high was last week. Well, the week before last. Now, that was the week beginning the 12th of May. That was 594.50. This week, 595.54. So it did, during the course of the week, peak a bit higher. The problem is that, of course, we had a smaller candle. And as we look, and again, remember, three-wave trading is what we do. The biggest wave, that is the one we always want to follow, is the weekly chart. That's where the big money is in trading. We love weekly vertical crossovers. That's where we go from a down move to an up move, or from an up move to a down move. Getting in when you can on that and riding it as long as you can. That's the big money, not the little seesaw stuff in here on a small chart, day trading, but long trading, weekly trading. That's what we like. That's where you rest easy, you watch things, you let it play out in your practice trade. Now, we see our volume just a little bit higher than last week. Red simply means it opened lower than the prior close, but that's a bit of a warning, isn't it? And we don't have nearly as tall a candle, but here's where my real concerns are. When we started crossing over and breaking our weekly trend line, we saw it on the 2-day chart that has since closed now with a red candle piercing. Now, we saw that happen if we go back a few weeks to the 17th of April. We had 2 weeks of trying to move up and then dropping over, but then things took off and sailed. That is where we had these 2 weeks of dojis, right? And then things started to take off beginning the 28th of April. So I do see warnings here. We've had several days with red down candles on the half-day chart, and it didn't yesterday, but today has penetrated the weekly trend line. So warnings, even though our overall, and again, putting emphasis when we do our evaluations, it's giving each of the 3 time periods equal weight. But the problem is that we can see problems happening early, and they don't reflect in those probabilities potentially until it's too late and you have lost a substantial amount of your gain, although our gain has been pretty incredible. But at the same time, we want to get out when the getting's good. So we're going to be paying very close attention on Monday as to whether or not this market has Tuesday, but on Tuesday when the markets open again after the holiday, on whether these markets have adjusted to the issues, tariff fears, and those kinds of things that have driven the market to pull back here. So we're not out yet, but of course we're not getting in. We haven't been getting in as we've seen these red down candles because, again, remember, even though we might have a backtest accuracy of 75%, a probability of 70% of an up move over the next 5+ days, we have to have what kind of signal to jump in 2 consecutive green Heikin-Ashi candlesticks on the 195-minute chart aligning with the 1 week and the 2 week uptrend. We haven't seen that for days now. So again, we would not be pulling into that. What we're looking at now is how long do we stay into this trade? Many times when I see things breach on the 2-day and the half-day, our weekly trend line, I'm looking for any and every reason to take profit. And again, not ride a down move, not catch a falling knife. But again, we could see things recover here. We've seen that happen before. But after such a long up move, it's just normal for the market to pull back. Maybe it'll start back up again. But again, we will pay close attention. It wasn't down a lot today, just 0.68%. Now the NASDAQ, and we've been talking about where the NASDAQ peaked a while back and then sliding sideways and rotating over, going down. But look at it. It's not penetrated the weekly trend line yet. On either the 2-day, it's sitting right there on it, or the half day that's sitting right, well, it looks like at the end of the day, maybe it's just right there on it next to it. But again, it was down more, not quite 1%, 0.93%. Where does that leave us? Well, we've had a smaller percentage, a little more than a coin toss at 65% bullish, 70% back test accuracy. Again, we still have, the weekly chart, which is the big chart. That's the king daddy of our charts. But again, it's showing inherent weakness there too with the sideways slide. And again, with the 2-day starting to dump over. So we are cautious and paying close attention with a continued up move in the NASDAQ and the S&P. Let's go into bonds. Bonds up just a tiny bit today, 0.17%. You can see where after many days, and again, we've had this bonds down, pop up, go down, pop up, go down, pop up. Long way from penetrating the weekly trend line on both the 2-day and the half-day. So again, still short on bonds, 80% bearish, 85% backtest accuracy. That's the kind of trade that I like to see, that I like to be in, that I like to watch moving in the right direction. So we are still highly bearish on 20-year U.S. government bonds. What about gold? Gold bounding up today. We have been bullish on gold. Yesterday, we told you that we were 70% bullish on gold, even though yesterday was a down day in gold, and gold, of course, rewarded us for that. We still are bullish, 70%, 75% backtest accuracy. See about $4 in move left on that till we hit some stronger resistance to it. But again, gold up, reached its high back on the week beginning the 21st of April, then a doji week, then tried again, then failed, then down last week, and then a green spinning top this week. Decent volume. We hit average for the first time, green average for the first time in a while, but we had average volume last week, even in that down week, things trying to recover. So we are still bullish on gold, and it has served us well. What about Bitcoin? Well, we've been bullish on Bitcoin, 70% directional probability for continued up move and 75% backtest accuracy. Just so happens those figures are the same for gold. And again, we see the possibility of further up movement there. Bitcoin pulling back today, 2.19%, of course, after hitting that high of highs yesterday. And of course, you could expect, we've been telling you, we were thinking that Bitcoin could possibly, stop at the prior high, which we hit back on the week of the 16th of December on this HODL chart. And maybe it would push up to there and stop in some profit taking. We do see potentially some profit taking today. That, again, doesn't change our bullishness nor our backtest accuracy. So we will keep an eye on Bitcoin as we jump into this next week. Of course, we've watched Bitcoin in this latest move up, down and sideways a little bit, up, sideways, down, up, down, moving up, down, and up, and now pulling back yet again. Nothing unusual about that. Well above the weekly trend line on the half day and the 2-day. And again, Bitcoin just moving up beautifully. It's nice to see just this clean stair-step up move. Now again, Bitcoin, like everything else, it goes up and down. So pay close attention to it as we move forward. Again, hope everyone in the States has a great Memorial Day weekend. We'll be back with you on Tuesday. Who knows? We may come up with something interesting over the holiday. So pay attention to your email and, of course, to chartingwealth.com to see what we might put out for you. And again, we always love to hear from you. CW@chartingwealth.com. If you're not a Patreon member, become one, because the first thing you get is my latest book, Three-Wave Trading Advantage. You will love it. I've got nothing but high compliments on it, and it's available only to Patreon members. And again, at any of the 3 levels, starting as little as $30. In addition to that, you get our 3-part series, Options Made Simple, the Charting Wealth Way. You're interested in options? We're interested in teaching you all about them. God bless, my friends. All the best from the whole team at Charting Wealth.